Hello everyone. Hope you guys are doing great. In my today's video, I'm going to discuss with you about a company called Arman Financial Services Ltd. We're going to go through their, recent result and the management commentary about their demand and how things are improving and what is their guidance for FY27. But before we get into that, let's just understand what does the company does, right? So they are Arman Financial Services Ltd is an NBFC which provide loans to low income group people, so they mostly operate into the microfinance segment, if you can call it. So over here, right, they provide loans to these joint lending groups, and then they provide loans to MSMEs. They provide loans, two-wheeler loans, loan against property, and they recently launched a solar loan vertical. But majority of their revenue still comes from the microfinance sector, close to around 80%, and they have quite high exposure over there. And this is very important when we go through the results and the number and understand, because we need, if you might have been following the microfinance sector for the past couple of years, especially from 2024, right? The sector has been in the down cycle, and things have literally got worse for any companies operating into the microfinance segment. But if you look at the recent results and everything, things are slightly improving and things are getting better, and it looks like majority of the microfinance company is coming out of the wood. And the same thing can be said for Arman Financial also. We'll just look at the number and understand why am I saying that, right? If you look at their Q4 revenue, right, it dropped by 12% to 176 crore, but the profit was up by almost 221% to 41 crores. And if you look for the whole year, revenue, it again decreased by 12% to 646 crores, but PAT was up by almost 8.7% to 57 crores. So you might be wondering, how come the revenue declined for Q4, but the profit jumped so dramatically? One thing we need to understand whenever analyzing company into the finance sector, right? We have to look at the asset quality, the provisions that they provide, because that's what's matter. No matter how much loan a bank or an NBFC gives out, right? But if the money does not come back, it's of no use. I can, as a NBFC, I can show a growth of 100% by giving 1,000, 1,000 crores of loan. But what if almost 50% of the loans never come back? That's a big problem, right? So that is one of the important things that we need to look at. So if you look at their provisions, especially for Q4, right? If we compare to the last year, they provided for almost 89 crores as bad loans. If you look at this year, it has come down to 17 crores, which is almost a drop by almost close to 80, around 80%. And if you look at the whole year also, things have improved. Last year, they provided total provision of around 264 crores, but in FY26 it came down to 148 crores. So, and if you look at their quarter by quarter number, things have improved drastically, and Q4 is actually a much better number, and this can be seen in the overall number also, right? So I'll go through the business growth stats, profitability stat, collection efficiency, and asset quality. I'll go through all those things. And if you look at their asset under management, right, for Q4, it grew by almost 21.5% to 2,728 crores. And if we look at their disbursement for the whole year, right, it increased by almost 42% to 2,433 crores from 1,713 crores. And the other thing, if we see, right, as I said, right, whenever a company is coming out of this, MFMI cycles, we need to compare their Q4 by, the quarter by quarter number to see how things are improving. Because when the down cycle lasts for a couple of years, right, if you are comparing the number from this year to the last year, it might not get the exact number. And if you look at the disbursement for Q4, right, the management said that it was the highest ever disbursement of almost close to 951 crore, which is a growth of 75% compared to the last year. And if you look from the Q3 to Q4 perspective, it grew by almost 54%. So that means things are improving. The demand is coming, and the company is willing to loan. And if you look at on the profitability side, right, uh, if you look from the gross total income, it decreased by again close to 12% to 646 crores. We all know, because of the down cycle. But in terms of, if you look at the net interest margin, it has improved from 16% to 17.2% for the whole year. ROE improved from almost 5.9% to 18%. So this also shows the bad quality loans are decreasing. The provisions, most of the provisions have been provided for, and the overall return on equity is improving. And if you look at their collection efficiency, right, if at the end of March 2026, it stood at around 96.8%, around 9%. And if you look at the asset quality, right, which is a very important factor, their GNPA has come down to around 3.43%, and the NNPA has come down to around 0.93%. And if you divide it as per the segments, the business segment that they have, right, so if you look at the GNPA for MSME, it has around 3.84%, MFI 3.4%, two wheelers around 3.95%, and LAP, which is loan against property, is around 0.74, 74%. And if you look at the NNPA for MSME, it's around 0.85%. MFI, it is around 0.95%. For two wheelers, it is around 1.66%. And for loan against property, is around 0.32%. And if you look at this overall segment of GNP and NPA, and if you look at that, loan against property has the least amount of GNPA and the NNPA. And you might be wondering why, but you need to look from this perspective, right? Over here, people take loan against their property, right? And in India, we, how to say, we love our property, or we love the land that we own, or the house land that we own, right? And we don't want to lose it. So the chances of people defaulting on this loans are very less. And that is the reason why, if you look, the asset quality against loans against property is much better over here. And what the company is also trying to do is, like, it's trying to increase their share, the revenue share from the loan against property, because if they are able to increase it, then automatically the asset quality will improve. And if you look from the growth perspective, right, so what the management said, right, the overall industry is witnessing improvement, and they see the demand coming up, and that is the reason why, the Q4 disbursements was so high. And in terms of the revenue guidance, what the management is saying, that they should be able to grow their overall book and the revenue by around 25% plus. But the way I see is Arman Financial, which has done in the past, right, when things were all going well, I think they can easily do more than that, close to between 30 to 40%, unless and until they are very cautious, and they keep a leash on providing the loans. But easily they can grow by between 30 to 40%. In terms of expansion, if you look at it, right, they have extended their branches in UP, Uttarakhand. They have improved their LAP team, which is loan against property team. And I gave you the reason why loan against property is so important for them, because of it will improve their collection efficiency as well as their asset quality, right, and ensure that the loan money comes back. And the other thing which they have done is, right, they have launched solar loan vertical, where they will provide loans to the individuals to install solar at their home. So these are the things that they're doing. And if you look at the other thing which they have done in order to improve their overall collection efficiency and asset qualities, right, they earlier in their branches, right, the credit and the recovery function used to work together. It was like the same team handling two separate functions. But I think after this down cycle, they have realized that this has created a bit of a problem for them. So what they have done, they have created two separate teams, one for credit alone to ensure that how the loans are given and the credit is evaluated. And for the recovery, it is a completely different one. So there is no, how to say, overlap, and there is, how to say, better accountability. So after doing this, right, they have realized that there is more accountability. They are able to monitor the overall loans and the recovery in a much better way. And the collection efficiency has improved. And the other thing what the management said that they're doing, right, they are moving away from group-based assessment to individual level credit evaluation. So as I told you, right, in the microfinance sector, so they used to give loan to this joint lending group, right, like group of people together. When they used to evaluate the credit worthiness, right, they used to take the group as a whole and then evaluate and then give loan accordingly. So, I mean, I'll just give you an example. But now they're moving into individual level. And I think I understand the reason why. Because let's take this as an example, right? If in a group, right, one person has a proper, very good, very good credit, and the others might have a decent and might have low. But when you take the overall group credit, right, it might look better. But at an individual level, they'll be able to know much better which person is more credit worthy and the loan will come back, and which person is more risky, which will hopefully reduce their overall risk and the bad quality in the going future. And the other thing what they have done, right, they have covered 90% of the microfinance portfolio is under the CGMFU scheme. If you want to understand this, I've spoken in my earlier video for Arma Financial. You can definitely go and check over there. So that means this is structured by this scheme, which is run by the government. And if you look at the overall result, right, and especially the recent quarter on quarter, right, we can definitely see that the things are improving for Arman in terms of the profitability increasing, the asset quality is getting better. The how to say the disbursements are improving. So I think this year is going to be much better for them compared to the last year. And if things goes well, and they are able to capture this whole MFI cycle turning into better, I think this could be a good opportunity. But always remember, microfinance industry always runs in cycle. So if you are investing, you need to understand when to get in and when to get out, because that is one of the most important thing. Because the people who got into Arman Financial during 2024 would have got stuck for the 2 years with literally no return. But people who knew when to enter or when to exit had fared much better. See, no one can enter at the right time and exit at the right time, but at least you can be, one can be closer to it. Because personally, I had invested in Arman Financial in 2022 2023, and when I realized the down cycle was about to start in 2024, I sold all my stake. And a disclaimer, I have again, when the cycle was turning, I've again invested back into Arman Financial, and let's see how this what do you call the MFI cycle plays. And if it plays well, it could be good. If it doesn't, then I'm ready to press the sell button. Doesn't really matter what, because I need to protect my capital. It's not about the profit, it's about protecting capital. But at the same time, when market gives us such opportunities, right, one should be ready to take it. So this is not a recommendation to everyone. Please do your own analysis and you know look at this company. But this is how I see, and this is my analysis. If you like the whole video, please do hit like and subscribe to my channel. Thank you and God bless you.